Bank of America, Wells Fargo, Goldman Sachs, Citi, PNC. The banking crisis is beginning. Hundreds of banks face massive deposit outflows, billions in losses. All U.S. banks. A record-setting $870 billion left U.S. banks since the Federal Reserve started raising interest rates. Now just stop and think about that for a second. The Fed's first rate hike was back in March of 2022. So over a span of 18 months, U.S. banks have been losing billions of dollars since then. Losses at a rapid rate of speed with no signs of stopping due to the metaphorical brake failure with Jerome Powell behind the wheel of this out-of-control central bank joyride with you and I, the American people, unwillingly along for this dangerous ride. On average, they lost about $73 billion in deposits every single month. And this has never happened before in the history of the United States. Even the FDIC just had to admit that bank deposits are declining in the second quarter and likely again in the third and fourth quarter of 2023. So remember, based on the latest official data that they published, total deposits declined for the fifth consecutive quarter. And needless to say, consumers are losing confidence in the banking system as a whole. And in fact, the truly massive deposit outflow is a wake-up call that raises very serious questions about the banking structure in its traditional sense and the banking crisis overall. Now, this has me, as well as many other smart and intelligent people just like yourselves, asking the same question. What's truly behind it all? Is this intentional, or can this be written off as solely incompetence? Purely justifiable on the part of those who are making these decisions? Of course, there's no clear answer to these questions. There never has been, there never will be, and they prefer that it stay that way. And the honest answer may very well be just a simple one at that, if they would ever admit it. And that is that basically it's both. So you see, in any case, if you think that the banking crisis is over, unfortunately, there's absolutely nothing. There is no evidence to prove this theory or wishful thinking, and hoping and praying for those living broke and paycheck to paycheck who have no upside in sight. And as this continues to flow over and into the start of the new year, the banking crisis will just get worse, precisely because the majority of regional banks are exposed to commercial real estate loans, massive amounts of bad debt, and overextended credit lines. And I even have several other videos with more details if you're interested to learn more about what has been happening and just how exactly we got to this point, and more importantly, what will happen next and how to get ready and be prepared. So stay tuned. But like I said, the banking crisis is beginning, and this is all happening right now, folks. Banking turmoil resulting in banks posting massive losses. What's happening right now and likely tomorrow, and what we need to know about the banking crisis and the monetary policy changes. And I'm going to break it all down for you. I'm going to show you exactly what's going on so that you can prepare yourself for what's coming. Because what I think is going to happen is all these newly introduced bank losses and regulatory changes are going to be pushed onto the consumer. Things are going to get a lot more expensive. Money is going to change, and people need to know what's really happening. Please hit the like button. When you hit the like button, YouTube is going to share this content to educate the people about what's really going on. And if you'd like to fix your credit, we'd love to help you. My favorite company, CreditSaint.com. That's CreditSaint.com. They can help you with late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, and any negative items on your credit report. Go to CreditSaint.com by clicking the link in the description below this video. All right, folks, check this out. All these regional, mid-size U.S. banks are stockpiling cash, Wall Street banks, and Reuters reports they're bracing for a doomsday scenario. And why exactly? Well, it's quite simple. Because they're getting ready for an economic slowdown. Deposits are pouring out of their branches, and ledgers are getting skinny since the consumer has had the squeeze put on them over the past 18 months at the very least. Banks prepare for new, stricter rules that could hit them hard. If you stop and take a look at how much cash these banks are holding, you'll begin to realize that that's not a good sign. And this isn't something that banks normally or typically do when they expect sunshine and rainbows. Nope, they're battening down the hatches because they know a violent storm is on the way. It is a state of emergency inducing event, and they're expecting mass casualties. The second reason for this cash stash is consumer delinquencies, which is just a fancy term for people not paying their bills on time. We are a country built on and based off of debt, and we have racked up a lot of it. And when you are repaying old debt with new money, things can go either one of two ways, basically. Behind door number one, you're repaying old loans with really low interest rates with new money that has typically seen an increase in value and an ease of accumulation due to inflation. And that is an ideal situation for debt-laced consumers riddled with monthly minimum payments to make. However, what's behind door number two is tonight's worst nightmare. Repaying loans with unbelievably high and record-setting interest rates by the Fed and dollars that have been further devalued by inflation in a recession with tons of job loss, higher prices everywhere you look, and tanking bear markets that have crippled most of your average and everyday non-accredited investor. So it pretty much goes without saying that the latter is where we are today, and the banks know that they have been serving out shit sandwiches and are getting ready for all the unhappy customers to throw up from the huge financial and economic catastrophe that has been in the works at an accelerated pace since the first confirmed cases of the viral pandemic's start and outbreak. Bottom line, and to put it in simple terms, more folks are struggling to pay off their car loans and credit card bills. Credit card delinquencies shot up to almost double-digit percentages, and auto loans aren't far behind. The repo trucks are out in full force, folks. I saw one riding around my neighborhood last night, unfortunately, and this was just after it got dark. And with student loan payments resuming and starting back up, the delinquency storm isn't calming down. So now I'm really intrigued to see how this is going to play out as a built back better based on old JB's plan. All right, folks. So far in this video, we've covered two big problems for regional banks: cash flowing out and more debts piling up. But there's a third risk that's flying under the radar. And yes, just as you more than likely guessed it, it's all about politics. Big changes are coming for banks due to forced government regulations. And with all the turmoil in the world, from Ukraine to immigration issues, banks, and now Israel, Hamas, and Palestine, banks are expecting Uncle Sam to tighten the screws. So make sure that you brace yourself and get ready for what they're preparing to allow to happen to the American people and small businesses, and likely even some smaller banks and credit unions. And in order to do so, we must now talk about unrealized losses. So when your investments lose value on paper, but you haven't sold them yet, that's an unrealized loss. And the FDIC has pointed out that these unrealized losses are growing, especially with rising interest rates every single month. It's an enormous red flag because it shows that the value of the stuff on the bank's books is sinking fast, and this trend isn't slowing down either. So prepare yourselves when the latest data drops, because here's where things are going to get wild. Banks are selling some of their sinking investments and adding the cash to their balance sheets, and needless to say, it's a desperate move, almost like a last-ditch effort to stay afloat. So for example, Bank of America sold a whopping $93 billion worth of investments at a loss in just 2 quarters. And why would Brian Moynihan do such a thing? Well, it's because they're trying to reduce risk and get a better return on the cash that they've still got left remaining. In a nutshell, regional banks are facing an uphill battle. They're stockpiling cash to prepare for the worst, dealing with more and more people struggling to pay their bills and facing stricter government regulations. And that's not all. There's a silent crisis of unrealized losses that threaten to shake the banking world upside down. So keep your eyes on the horizon, because this story is far from over. And I feel extremely confident that we all know what's likely to happen next. And perhaps we too should be taking cues from the banks to build up our own stockpiles sooner rather than later. I know that there may be some opposition to their plan and what they're preparing for, and some will argue it will never happen. But trust me, it will happen. It will happen. And if you want to chat with me about it, then just let me know. We can schedule a call to talk. The entire banking industry, the money supply, and lending is about to go through a massive change. And that's why these banks and the Fed and FDIC and US Treasury and the current administration are silently gearing up. And a lot of these smaller regional banks are beginning to get worried. And it's all just getting a whole lot harder for 99% of all of these people. And with all the profit-driven enthusiasm for this new shift in banking, it's apparent that the future holds more hardships for the common folk, the average Joe, and the just plain old everyday working middle-class people. Prepare for a world that's more expensive day by day, harder to keep a head above water and make it living paycheck to paycheck, and where the elites and politicians satisfy their maniacal greed while we foot the bill for their grand plans. The game is rigged, but we have to play it, as we're left with little say in how these changes affect us. Bottom line, things are going to get a bit more expensive because of all of these changes, like when the price of your groceries goes up even more, and they're not going to let you borrow money to get by. The costs will go up, and people will have to pay more for the things that they buy. It's not just because of inflation. It's because of these new rules. So get ready for a world that might be a bit harder to live and more expensive to survive, more challenging. The big people like the rich and the politicians are making these rules, and we have to follow them, even if we don't have a voice to cast a vote and decide. So it's essential to be ready for these big changes in the way that things work. And remember, if you need help with your credit, there's a company called Credit Saint that can help fix it. Just go to their website by clicking the link below the video. That's all for now, folks. I will catch you all on the next one.